Hey guys, welcome back to the Independent Investor Channel. So good to be with you. My name is Ryan. We're coming to you straight from the Big Apple, New York City, New York. This is part of my Bullseye series. This is going to be investor tip number 3. What we're going to talk about is emotion in investing. And you guys are going to find that this video, why would I put out a 5-minute video on emotion in investing? I find that this is really a big shortcoming for a lot of people. And especially with all the news media and all the information you can get online, there's so much hype built up around, the market at any given one time. But now with the market being at all-time record highs, there's no shortage of media outlets jumping on the bandwagon to try to influence your decision, guys. And you got to understand where they're coming from. They're really trying to, deliver their product in the most entertaining way. And I find that for the folks that are really looking to invest and save for their future in the proper manner, they're going to end up putting their investments to work for themselves and then actually forgetting about them. I say it all the time on the Independent Investor Channel, investing done correctly is actually quite boring. Okay, guys? You buy the very best of the breed within each of the sectors, put yourself in a nice passive ETF or an index fund, and just let those investments ride, guys. But the one takeaway that I always stress in every video I put out is to make sure that your money is placed in the correct account. All right, guys? So please enjoy Bullseye. This is going to be investing tip number 3 on emotion and investing, guys. All right, the first thing that you can do to kind of alleviate or take some of the motion out of investing is to stick to the plan. And the easiest way to stick to a plan is certainly to do your research and get a little bit of an idea of what the market has to offer. I've come out with videos on compounding interest and the power of that. And if you watch some of those videos, it can certainly give you some validation, right? But sticking to a plan is one of the most difficult things to do, and it's one of the most critical things that you can do. If you can invest in the same account and put assets to work in that account and stick to that plan for 30, 40, even 50 years of your time horizon and not jockey with that position too much or not change multiple accounts, guys, the sky's the limit for you. You can realize maximum returns if you just put those assets to work in the right account. And again, we stress on the Independent Investor Channel the importance of the self-managed Roth IRA account to maximize up to your $5,500 a year cap. Guys, and then after you get that $5,500 going and you've established that, criteria and maxing that account out for a couple years, then you can go ahead and branch into a brokerage account, okay? But don't go for the brokerage account in lieu of that self-managed Roth IRA account to start, guys, all right? So the most important thing that you can do is start the right account. That's going to help you have peace of mind. That's going to help you know that you're in the right vehicle by having no fees on that account, and to make sure that your money is growing tax deferred going forward, all right? Now, the next thing that you can do is buy the right stock for that account, all right? And you might thinking, okay, yeah, sure, Ryan, right? It's really easy to buy the 5 perfect stocks that always go up every day. There is no such thing. There is no such thing. Stocks are going to go up and stocks are going to go down. What I mean is, the trick is to identify that asset or that piece to that portfolio that is going to fit for your risk tolerance. It's going to fit with your amount of income that you can set up on a monthly with, a monthly contribution. Something that's going to diversify your portfolio. Okay, a Google stock for one person may not be the best investment for another person. All right, so the trick is to identify what it is makes sense to you. Right? If you guys identify with a John Deere and that's going to be the first stock that you purchase, then so be it. If it's going to be a Kraft Foods, right, or an Apple Computers, guys, it means something to you to take part and participate in those good companies going forward, and it can validate kind of why you entered into those positions in the first place. All right, guys? So the second thing is to buy the right stock. And again, my explanation is really simple. It's just got to be right for you. And I stress all the time on the Independent Investor Channel that no one portfolio is the same, okay? We can all formulate these portfolios different for each and every one of you guys. The important part and the common thread amongst all these accounts, I contend the most important thing you can do is start the right account, all right? And then the pieces within that account can kind of be manipulated to suit your own risk tolerance, all right? The last thing we've got here is stocks have no emotion. One of my favorite investors that I follow, Warren Buffett, one of the best passive investors of all time, right? He says that stock has no emotion. And I find all too often that folks get involved or overreaching aggressive positions are placed in portfolios with the intent that we're going to somehow, get rich or accelerate our earnings, right, at the expense of buying good quality stocks and just letting those stocks sit in those accounts and work for you and pay you back, all right? It doesn't matter how emotional you get about a stock. It's either going to do one of two things, guys. It's going to go up or it's going to go down. And if it goes down, there's no measure of how worried you can get to try to bring that stock back, all right? There's no amount of thought that you can put into bringing that stock back, all right? The stock doesn't care how you feel. It doesn't care, all right? So why we so often approach investing in an emotional manner, right, when emotion really has no place in stock investing in the first place, guys, is kind of a lesson inherently to be learned. In that if we can learn to put those vehicles in the right account, pick the right stocks for you, and realize that there is no emotion in investing, guys, you're going to be so much better suited going forward. All right? Guys, I hope you enjoyed this series of Bullseye. This is just a quick push out of information on common themes or misconceptions that I see in the investment world. If you have not subscribed to the Independent Investor channel, I would just ask for your support. Hit the subscribe button on the bottom. Share the link with anybody you know that can benefit. Hit the thumbs up button at the bottom of this video. Guys, leave your comments at the bottom. If there's certain topics that you want me to cover, please address those in the bottom. And if not, I'll reply directly to you guys. And guys, thank you again so much for joining, and good luck in your investment future.